not dissuading them from putting the price up, are you? You're not taking them off the numbers. So that tells you something. So what happens after that is you're not able to hedge. You're not able, that's not a hedge trade. That's just a pricing trade, right? So now that you're getting people buying at a higher price, buying volatility at a higher price, then you start saying to yourself, wait a second, that's not very good. So what you've got to try and do is, then hedge out your exposure, because you're not hedged by trading SPY VIX. That's not a hedge. What you do is you start rotating into short duration volatilities, and that obviously, that rotation starts to improve the, starts to increase the price of volatility as well, and we have a knock-on effect and a knock-on effect and a knock-on effect. But the first market that diverges is going to be SPY VIX. The first market that diverges is SPY VIX. The second market that diverges then is going to be the VIX-M, VIX-Y, and we start to see that big sell-off in the Qs is just rattled beautifully off those high print prices. It's a beautiful trade, and it's a trade that we've covered many times as being the best trade on the planet, bar none almost. We can obviously argue if you're a bond trader and say, well, I don't know, the 2s, 5s predictor and the 5s, 10s predictor is a pretty good trade. The DVO1s is a pretty good trade. The Grail's a great trade. The oil boys would probably say the crack spread skew is a very, very good trade. Yeah, so there's plenty of very good trades, right? But SPY VIX is just a sensationally good trade. Anybody still making money on that top line bond? It's taken a long time, isn't it? It's boring us to death, but it's still making some monies. The only concern and the only reason I slowed my selling down was because the Japanese yen caught a bid. Once the Japanese yen turned the bid off, it was very easy to sell back into the top line bonds again, and we've had a very nice rip to the downside. So here it is here. You can see what happened. The bond price drove up, but the Japanese yen was driving up as well, so that's okay. There's not very much we need to worry about on that one. We can see the blue line makes a lower low. That's what we're looking for, because when the blue line makes a lower low here, this is obviously the 2s, 10s. When the 2s, 10s make a lower low and the bond price has not, that gives me the confidence that they're doing that same absorption again. And they're doing it on this candle right here. They're doing it on this phase. And we can see that at that stage, the Japanese yen switches off. Perfect. That's exactly what we wanted to see. The Japanese yen coming off the trade to allow us to then sell the top line bond. And that allows us straight back onto bonds at 18s, 19s, or 20s, trading 5s and 6s at the moment. A very, very nice trade, a very, very nice outcome. And just probably a lot more work than I thought it was going to be be perfectly honest, Miguel. I thought this was going to be quite an easy journey into the top line here, but my goodness, we've had to work pretty hard to get it. But hey, it is what it is, I tell you. It is what it is, but there's a big short coming in. There's definitely a very, very strong stir steepener still visible on that chart. And there's a big short brewing, and that's going to pop the short-term interest rates, which obviously could be very negative for gold and equities, couldn't it? It could be very negative for gold and equities. If we see a big pop on short-term interest rates, well, we might start to recognize that if we get a terrible, terrible, terrible auction tonight. That might start showing up as a possible reason for this storyline to evolve. People demanding higher rates, demanding those elements, and for that reason, obviously, they want a higher, very significantly higher yield. So we might get a terrible, terrible, terrible auction in this case, and that'll put a huge sell into this bond market, which is going to be great news if we get a terrible auction, of course, and that would work out beautifully for us, wouldn't it? That would work out beautifully for us the way it is at the moment. Let's take a look at inflation break-evens as they're standing just now for this trade. And this is the European one, priced up in the US. So when we look at the European priced up in the US, you can see that that seems to be causing part of the problems. We seem to have a bit of a sell-off in inflation break-evens. That's one of the problems that we've had with this trade making its break just yet. That's okay. We can recognize it. We know it's there. We can see it. In terms of equity duration, are we bullish or bearish? Well, it was very bullish after the Japanese yen caught a bid here. And obviously that dragged equity duration higher. Brilliant spread trade, by the way. Brilliant spread trade. But that spread trade also coming out on this pin candle. The spread trade on equity duration coming out on that pin candle at the top line, giving us a very, very strong case to work away from the top edges. Classroom, guys, in half an hour.